I'm going to share with you 6 lessons I learned that helped me go from working a regular 9 to 5 to making over $5.5 million in crypto. You need to pay attention because if I knew these lessons sooner, it would have helped me make even more money and saved me a lot of time. So let's get into it. Lesson number 1. Everyone requires different strategy. Not because of the numbers on the screen, but because each portfolio size and each individual has different goals and different risk profiles. For example, if you are trading with $1,000, you do not have the same risk profile as somebody with 6 figures, 7 figures, or even 8 figures. And somebody with 7 figures does not have the same risk profile as somebody with a hedge fund. So you all need to trade differently according to your size. And if you have $1,000 to 4 figures, you are small here. So your number 1 goal should be to focus on growing your portfolio. And if you are stuck in this category, you simply aren't taking enough risk. And how do you go from 4 figures to 5 figures? Through low cap token investing by picking coins on narrative, which we're going to cover later on in this video, high risk trading, and then compounding on each win that you make. The main thing here is that you have to be right in order to compound your portfolio. However, if you are wrong and you do lose $1,000, it doesn't really matter because $1,000 is easily replaced and you can start again, which brings us to $10,000 or 5 figures. This is the standard size account here, so you don't need to rush, but you still need to scale. You have a lot more flexibility than somebody with $1,000. But our next goal here is to scale up to hit 50 to 100K. And how do we do this? We still use portfolio concentration on 1 to 2 high conviction bets. What do I mean by this? Is not diversifying your portfolio, which we're going to cover later on in this video. And there is no need for crazy risk, such as 100x leverage or any emotional decisions. Everything should be planned out in this area using logical decision. And the best part is that you can split your risk between high risk bets as well and some stable plays because you still need that solid foundation, but you still need to focus on compounding your portfolio. And the thing is with these 2 areas here, this is where most people get stuck. As soon as somebody hits 6 figures, everything changes because for most people, 6 figures is a lot of money for them for the first time. So what happens is that your emotional part of your brain starts to override and make irrational decisions, which lead you to giving back profits quite often. And this is where most people get stuck. However, if you want to get to 6 figures and then hit 6 figures and beyond, what you need to focus on is protecting more capital than risk. What do I mean by this? We still focus on a few high conviction trades, but this can be over the entire year, and this can change your life forever. And it's exactly what I did when I had $5 million stolen from me from the FTX exchange collapse. When I made back 6 figures through trading, I put my money into coins that were on narrative with precision and timing. What I did is I put mid 5 figures into coins like Pepe and Inge before they moved 10 to 40x. And this allowed me to make millions of dollars. For example, if I put $40,000 into Pepe and it 20 to 40x's, this makes me $800 to over $1 million depending on the rate of return. For example, this was one on FET. I told everyone inside my private community here to buy the dip on FET sub 20 cents. And as a result, it went from sub 20 cents to over $3. And this led me to making millions of dollars in this space. So once you go from 6 figures to 7 figures, what do? Well, this is where you can manage the charts more technically, and you can start to look at higher cap coins. Or if you do like trading lower caps and then growing them up to higher caps, what you want to do here is take a small amount out and start again from the lower ends of this sequence as I mentioned, because this prevents us from giving any money back. And this is what people do. When they first hit a large amount of money, they go back into the market with the same risk profile as they did with $1,000. Now, once you hit 7 figures and beyond, your whole risk profile changes. You need to focus on capital preservation here. And then if you focus on capital preservation, you get growth as a result. And there is no need to chase every 10x coin. You just focus on coins with a lot of liquidity and you can get money in and out. Which brings us to lesson number 2. I've spoken about low caps and high caps, and each of these coins need different strategies as well. You cannot trade a $1 million market cap coin the same way as you trade a $1 billion market cap coin. So how do you trade a $1 million market cap coin? This applies to only high quality tokens that are on narrative are potential narrative leaders and that there are influencers backing them to bring attention to the token, because crypto is an attention-based economy. So coins that have no attention will probably not get a lot of volume. So for coins that are sub $1 million market cap, there are a lot of rug pulls in this area and scams, which will never perform. So that's why you need to be careful and focus on high quality only. And you can do this by these points below. Start with a small amount here because you're buying a sub $1 million market cap coin. You cannot put a large amount in because the risk is high. There is a high volatility in this area. For example, you may get in a $300,000 market cap coin. It goes up to $700,000. Then it comes back down to $400,000. Throughout this entire process, you've gone from 0 to 2x and back down negative 50%. So the volatility is extremely high. Be careful on launches that are really, really low, like $7,000, or for example, even Popcat. Right? Popcat here launched at a $700 market cap. And what snipers do is that they come in and buy all of the supply up to dump on you later on. So you need to be careful of people that come in and snipe launches, bots that come in and snipe launches like this here. But Popcat was never sniped, for example. This was a good launch. But you need to be careful of snipers coming in and buying up a large amount of the supply. Also, in this area, look for investments into growth. For example, are they investing in X Gold? Are they building out a high quality website? Are they investing into exchanges and things like this? And you should also check the top trader section because there shouldn't be too many people taking profits. And you can find that here. For example, on a $1 million market cap coin, you certainly don't want to see people taking over $20,000 worth of profits in this region. It kind of drags the price down. So that gives us a $1 to $10 million market cap coin. And this is our highest chance of hitting a 100x return. And in a $1 to $10 million market cap coin, it's still a highly volatile environment, but there is more chance of survival because the coin is distributed a lot more. And this is actually probably the best area that you will find something for long term. What you want to see here is a focus on support and resistance. I'm going to show you an example shortly. And also, good coins will focus on building liquidity and building liquidity pools. For example, I go to Popcat here. You can see on this liquidity provider section here that over 52 people provide liquidity to this token on this particular decentralized exchange. And as it is a $460 market cap coin, this is a good amount here. For example, on a sub $10 million market cap coin, there should be at least 3 on there. In this section, this is where you can buy and hold for longer term based on the chart and the points that I'm going to cover shortly. And if you have a smaller amount of capital, this is where your highest amount of returns are made. However, the risk is also extremely high, but there is no reward without any risk. So what is this setup that I like to look for on a token launch? Well, what this means is that a token launches here, price pumps, you get the early snipers and early investors distribute, the coin dies off, it forms an accumulation range. As you can see here, this was the first form of support. It then goes down into an accumulation range here. Then once the accumulation range breaks out, the resistance gets flipped into support. This is where you want to do your buying before price then pumps from a 300K market cap to over $20 million. And therefore, this is a 50x. So as you can see, this is a highly powerful system using when you see coins flip resistance and turn into support. But when you go from a 10 to $100 million market cap coin, the main focus in this area is token holders are increasing because then that means the coin is becoming more distributed. What do I mean by this? The top holders will start to take profit and therefore the coins are being distributed across the market, but there are more token holders coming in and buying up those people taking those initial profits. So then what you want to see is whales come in and push this project further, and then influencers also pushing this token even further. And between $10 million and $100 million is where you decide if a coin has staying power or is evergreen, right? And in whales, people can become whales. For example, they bought in early and their portfolio grows large because of the coin, therefore they become a whale. Or whales come in, but this is actually less likely to happen because a lot of people fumble their bags on the way up and they sell and take profits too early. So there is a less likelihood chance of this actually happening because people are too impatient and they sell their bags too early, which I will cover later on. Or people are already whales and they come in and buy with, say, $30,000 and replace those people that are taking profits earlier on. Then what you want to do is decide if a coin is evergreen. How do we do this? Coins that are evergreen or tokens that are evergreen are ETH and Sol. They're obviously evergreen and going to stay cycle to cycle. The meme coins that are evergreen are Doge and Bonk. For example, Doge has been here since 2014. Bonk is likely a coin, if they play it right, will stay here from cycle to cycle. Coins like Peanut and Mudeng have no staying power. They are probably coins that are just gonna fizzle out over time because they are all built on hype. Their initial hype here and then they all die out. And so this is a coin that's evergreen, and this is the difference in price action on a coin that is evergreen and that is built on hype. For example, as you can see, this is the market cycle here. A coin pumps, we reach the high, it comes back down, but we form an accumulation range above the previous one here. Then once it breaks out again, we then make even new higher highs and the coin pumps even further. For example here on Doge, you can see that we kept the highs and we kept that support level there. Then you have coins that are built on hype. You have the initial rally, the initial market cycle, it comes back down to the original starting point and then price bounces here. People buy up thinking that this coin is going to continue up higher, but it doesn't. People from this cycle sell their bags here, so there's extra sell pressure, and then the token comes down again. And then each time we get a lower high, lower high, lower high until the project fizzles out and there is no volume left. And then in a $100 million market cap to $1 billion market cap, we are not looking for 100x here. You can get a good 2 to 10x in this region. For example, when I bought Pepe, it was in this $100 million to $200 million market cap region before it went to multi-billion-dollar market cap. And the difference here between a sub $10 million market cap is that you can put a lot more capital in. If you're a larger trader, then you can put 50K into a $100 million market cap coin. However, you cannot put 50K into a sub $1 million market cap coin. And what you will see here is that you'll see a lot of copycats. For example, when Doge pumped, you started to see baby Doge Elon, right? This is a copycat of Doge and it will never ever pump as hard as the original. The original coin always pumps the hardest. And the originals is where all the money flows back into. The money does not flow back into the copycat. For example, an original will be a coin that is an evergreen coin. A copycat is a coin that is built on hype. So I'm not saying that there is no money to be made in copycats, but they are more likely to be hype coins overall. In this market cap region, this is where you want to focus on price action for good entry on these. So you can start to focus on price action. And $1 billion market caps and beyond, price action is a lot slower at this point because it takes a lot of money to start to move these markets. But because the markets are slower, you can trust the price action and you can trade it a lot easier. For example, you can trade and buy support and resistance levels. For example, this is where I made 150% gain on Bonk recently. And this is where you can buy with 100K plus and look for 50% to 3x gains. And in this area, you want to see what is strongest when the entire market dumps. For example, Bitcoin dumps, all of the altcoins will also dump. However, the altcoin that dumps the least is likely the strongest and therefore will rebound higher. For example, there's two charts here. You have something that is strong and then you have something that is weak, okay? When Bitcoin dumps, something that is strong will likely dump and then it will be bought back up very quickly. And you won't really notice a dump at all and it will be more of just a high leverage liquidation cascade. However, if a coin is weak, what will happen is that the coin will dump even further and then it will take time before it reaches back to the original price of the dump. So what you want to do is take note of this on dumps and pick the strongest coins. What many people do is that they think that the strongest coins should match this weak coin, and that's not entirely true. For example here, this is a 150% gain, a 2.5x on Bonk that I posted in my private inner circle. I told everyone to long Bonk in this region here, below this low, and that's exactly what happened. Bonk was here, and that led to 150% gain. For example, you put 10K in, you would come out with $25,000. So as you can see, you can get high conviction 2.5x's in this area. Which brings us to lesson number 3, patience. The best investor in the world said this: the markets are created to take money from the impatient to the patient. That is exactly what the market is a device for. This is the case for the stock market, Forex market, and crypto as well. This is the case for all markets. And you need to be patient in between the coins that you take, because this is not a 9 to 5 where you just trade your time for money. Spending more hours behind a chart does not mean that you make more money. This is trading and investing where you leverage your money to make even more money. That's why my compounding system that I mentioned in lesson 1, depending on the size of your portfolio, is super powerful. For example, if you are not patient enough to wait for a coin to pull back, let's say this is the chart. You are not patient enough for this price to pull back, so you buy here and then price dumps. You have just FOMO'd in at the top and you have lost money instead of staying patient and buying this dip here, which means you get the best opportunity. You have made an emotional decision in this area, not a logical one. Because patience allows you to make logical decisions, and patience is how you are able to get size on your winning trades. If you are patient, you are more comfortable to put in a lot of size down here. If you are not patient, you'll put a lot of size in up here and you will lose a lot of money. Also, another thing what happened is people are not patient enough to wait for coins that pump. For example, on FET, it took 6 months for it to pump before my original coin. But in those 6 months, people get impatient. And then what happens is that they sell the coin here. And then what happens a few months after, the coin pumps for a 10 to 15x. If you buy a coin with a plan and you are not patient enough to sit and wait it out, then you will lose out on money. So what you need to do here is stretch your time horizon from making money next week, making money next month, to making money across the next 12 months. Because the market will give you a few golden opportunities per year that is essentially free money on the table when all markets pump. So you need to be patient. And to be honest, the best traders are inactive 90% of the time. The best crypto investors are also inactive 90% of the time. Nobody is at the charts all day buying, selling, buying, selling, buying, selling, literally click, 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 click. Because in order to catch a large move, you need to buy down here and then sell it up here, which only requires 2 clicks of a button, which requires patience in between them. Which brings us to lesson number 4. These coins that you are being patient to buy needs to be on narrative. What do I mean by narrative? If you're not going to buy tokens in the correct narrative, you're not going to make money this bull run. Because the stock market does this. Let's take an example from the stock market. 2000, you had the dot-com bubble. Everything in Web 2 dot-com era pumped. But everything outside of this did not pump. For example, in the 2008 era, it was the housing bubble. And in 2020, you had the pandemic tech. And then in 2024, you saw the rise of all the AI coins. For example, Nvidia. But everything else didn't perform as well. Crypto is no different here. But the difference with crypto is that these narratives play out so much faster, which means you can make a lot more money faster. In 2011, you had Bitcoin and Silk Road. 2017, you had ETH, Bitcoin, and then the ICO bubble. In 2020/2021, you had the DeFi bubble, Layer 1s, Web3, NFTs, dog memes, and gaming. And then in 2024, you had all of the memes, you had AI, and then you had Bitcoin Layer 2s. So what you need to do is identify the narrative. But do not marry this, because the narrative is always changing and always will. Some of the mistakes the crypto investors in 2021 made this cycle is marrying the same narrative. They married the DeFi bubble in 2024 and ETH, which means that they didn't make as much money as if they focused on memes and AI. So these narratives are always changing cycle to cycle. And these cycles are always going to happen. And you can dress it up all in the macro, tech innovation, liquidity inflows, but all this does is it comes back down to these things: greed, fear, and belief. Because 99% of people in this industry just chase the money. And price is the only thing that leads the narrative. It is really that irrational. For example, meme coins have no tech use. They are not like the stock market, have revenue and projections and a working company. They are literally a dog with hat. Here's my dog with hat, right? But because the price of the dog with hat went up, people believed and made up, and they gave meaning to this narrative. So what people do is that they sell money from other narratives here, which means it shrinks in value, and then they take this money and put it into narratives that are giving them the best gains. For example, some of the meme coins had 50x returns, and that means that they get even bigger and even bigger. And this is just a typical market cycle until the bubble pops. What you need is liquidity, belief, and therefore you have a bubble. So people are believing in meme coins, and there is a lot of liquidity coming into this sector. Therefore, you have a meme coin bubble. So you either need to learn to play the game and just accept it how it is, or give money back to the markets. And that brings us to lesson number 5. Focus on yourself and stay in your own lane. Because in the 1930s, knowledge was power. Even in 2015, knowledge was power. But since the rise of the internet and AI, the game has completely changed, because in 2025, there is so much knowledge out there. Everyone's posting their opinions, but most of the people's opinions are incorrect. There are over 500 million tweets posted per day on X, and most of these people are incorrect. So in 2025 and beyond, you need to be good at deciding which information is correct, because there is so much of it now. You need to find. It's not about having all of the knowledge, it is about finding the correct knowledge. So take note of this, because there is always going to be somebody out there on X saying that they know the next best coin, or that they have found the next best thing since sliced bread. But they're only saying this because they have their own invested interest. They're not saying this because it is a logical decision. This is an emotional decision. So for example, why you need to stay in your own lane is because, let's say if you already have your bags and you have your own bags based on logical decisions and reasoning, this person over here is screaming emotional stuff that infiltrates your logical mind. So then you turn from a logical decision into an emotional decision. Now you have just gone from a strong winning position into a losing one. So do not let their words and opinions push you out the way of stopping you and your own plan. Stay in your own lane. And it's always like this. They always say that the grass is greener, because if you catch a 50x, there's going to be somebody out there that brags about catching a 100x, and it will make you feel terrible thinking that you could always do better. So don't let the comparison be the thief of joy. Or another thing here, you are focusing on a higher time frame swing position. You buy down here, price pumps up into this region here, but then the market goes down slightly. And what somebody does is that they start bragging about how they sold the top up here. And then what you do is you believe that that's the top, because at this moment in time, it may look like it. Things are down, say 10, 20, 30%, but you're still, say 3x up in fear that you're going to give back all of your gain. And what this person does, screaming that they called the top, has now made you sell the bottom, and then price pumps even higher. But this person who sold this top may have already covered their position here and are bragging about it. So don't let somebody with a shorter term time frame infiltrate your decision on a longer time frame trade. So what you need to do is stay in your own lane and focus on people who suit your style. For example, if you have a higher time frame swing trade perspective, don't let somebody who's trading lower time frame infiltrate your decision making. Which brings us to lesson number 6. Hold your winners and sell your losers. And the problem here is that many people hold too many coins, because some of the coins lose money, some perform average, and some make money. What do I mean by this? For example here, these are all of the coins that you hold. 6 coins. It's quite a few coins. What most people do is that they have 2 coins with a lot of money, and then they just buy a bunch of other coins with a small amount of money. But imagine this. Imagine here, these 2 are your largest holdings, and they are large losers, which brings down your portfolio. And then these coins with a small amount of money in don't even make a dent in your portfolio. So what you need to do is cut these losers and turn it into winners. So what people do, also another thing that people do is, let's say they're all evenly spread. You've bought 6 coins with the same amount of money in a hypothetical situation. These coins are bringing your portfolio down. These coins are bringing your portfolio up, and these coins are break even. What people do is that they sell these coins here that are bringing their portfolio up to cover for these losses here, in anticipation that these red coins will eventually turn green. But what actually happens is that they rebuy these red coins that are in the loss, and then they fall even further because they are not the coins on the narrative, as I mentioned in points earlier. So what you need to do is you need to cut these losses early and then add them to the winners, or find even more winners. So you can go from an okay position to a strong position, not from an okay position to now a losing position. And what you need to do here is sell these losses relatively quickly. And it's easier to manage when you have less coins, because there are only 4 outcomes to an investment: a small loss, a large loss, a small win, and a large win. And if you remove large losses from the equation, i.e. 40% drawdowns or more, that means that you win by default and that you make money, because these small losses and small wins counter out each other, and therefore you are only left with large wins, which brings your portfolio in to positive. So if you would like to buy the exact same coins and take the exact same trades that I'm going to be taking this bull run, then you need to join my 7-figure inner circle. Inside, my aim is to make every single crypto investor inside as close to 7 figures as I possibly can. And so far this bull run, I've already helped 5 other crypto investors become verified millionaires that you can see on the screen right now. So if you would like to join them, check the description below. And we are only just getting started, because everyone inside will continue to get rich this bull run while it still lasts. Because this bull run will not last forever, so you need to act fast. And you can visit the description below to find out more, to work with me one-on-one and see even more success stories that we've created, and join my inner circle. That's all for this video. I hope you have got great value out of this.